This is Scott Becker with the Becker Private Equity and Business Podcast. We come to you regularly with short business episodes, short private equity episodes, body of life episodes, money episodes, and also interviews with brilliant private equity and business leaders. Today's discussion is this: the markets are taking hyphen save like a pessimist, invest like an optimist. And so one of the things that you see is, we've had this period of time this year where the markets have been way up. The Nasdaq's been up like 20% or so. The S&P's been up 15% or so year to date. And it's one of those years where, you know, when it's going like that, people feel like it could never go down. It's going to keep on going in the right direction. And people somewhat start to spend like that, start to look at life like that with this abundance of optimism. And the flip side is, as we know, over the long haul, hopefully the markets do go up, but over any given period of time, it's like any given Sunday, they can go up or they can go down. This past week has been a disaster for them, going back down several percent over the last couple of weeks. And today itself, July 24th, a true debacle in the markets, with at this point the S&P down 1.8%. One of the phrases that's talked about often, I don't think it's attributed to Bill Gates, but somebody talked about Bill Gates in this light, is save like a pessimist, like things are going to go poorly, and invest like an optimist. And this is the concept: is make sure that you're always playing defense with your spending. You're always putting enough money away for safety. In my particular bailiwick, that's putting away money into treasury bonds and safer stuff. While I look at then investing like an optimist, is making sure I've got enough money plowed away into emergency funds and safe funds. So if the market goes down 2%, I'm only losing a fraction of that. And at the same time, the downside of that, of course, is when the market goes up, I'm not getting that full 2%, like the 2% down, I'm not feeling fully, but I also won't be feeling that 2% up. But the core concept, save like a pessimist, invest like an optimist, means you're always piling enough money away in safe stuff so that, and then as you've done that, you could also invest like an optimist. You could also have lots of money in S&P index funds or other types of stocks and equities that have more risk attached to them, with the hope that over the long run, the market will go up. But it's really this concept of hitting this proper balance of allocation that allows you as an investor to sleep at night when things are going poorly, and to enjoy some of the upside when it's going in the right direction. So the phrase, again, the headline today is the markets are tanking. The phrase for the day is save like a pessimist, invest like an optimist. And there's probably great analogs to different sports. Play a conservative game and then go big when you can. It's certainly the game in blackjack. You play every hand, and when you have a chance to double down, you double down. It's probably similar in lots of sports. You wait for your chance and then you invest aggressively, but you play a regularly safe game and then you invest. I know that's not traditional wisdom for everybody, but I love it. But the concept for saving and investing is save like a pessimist, meaning have enough money put away, then have money that you can invest like an optimist, with the hope that that's going to fly and grow and move in the right direction. Again, we love this concept. Anytime you want to send an episode idea to Scott Becker, please feel free to do so. 773-766-5322. Thank you for listening, and thank you to our magnificent producer, Jeremy Core, with Executive Podcasting Solutions. Thank you very much.